Bottom line, New York City's Build America Bond program got a big boost from the godfather of bond investing this week. PIMCO's Bill Gross said, "I love New York. New York City has come to the market with Build America bonds that yield 6.65%. And there's word today that that program, set to expire December 31st, may be reincarnated. Here to discuss this and more is the CFO of the most populous city in the United States, John Liu, Comptroller of the City of New York. Mr. Liu, welcome to Bloomberg News. Thank you so much. And we actually...
Good to be on, and I want to thank Bill for that.
We had a conversation beforehand because Comptroller, you said it's actually comp. I've heard it both ways.
It's written in the city law as Comptroller.
All right.
And I'd rather comp people than con people.
Very nicely done. Nice. The Build America Bond program. We heard today from Florida's Representative John Mica. He's going to be the incoming chair of the House Transportation and Infrastructure Committee. He said that he wants that to continue in some form next month. I want to get your thoughts on that.
Well, we certainly in New York City would like to see that continue. Our members of Congress have been supportive of an extension of the Build America Bonds program. As you know, BABs were part of the federal stimulus package enacted over the last couple of years, and they certainly have helped states and municipalities across America rebuild their infrastructure by accessing financing. In New York City, we have sold quite a bit of BABs over the years, about $8.9 billion of BABs over the last year or so, and it has helped us. It has allowed us to get favorable financing and allowed us to build schools, roads, bridges, hospitals.
What does it mean when you hear from someone, as we mentioned, the godfather of bonds, Bill Gross? What does it mean to New York City when someone at that lofty perch says that about what the city is doing?
It means a great deal because we want to make sure that investors see New York City as a good investment. For coming up on 200 years, 198 years, New York City has issued bonds to pay for our infrastructure, never for operating, but to pay for our infrastructure costs. And in the last year or so, we have issued about $9 billion of debt through Build America bonds. The secret, the magic of it is that it allows us to expand our investor base from beyond the traditional tax-exempt investors.
And part of that expansion, if you will, is to foreign investors. How do you do that? How difficult is that?
Well, it's an expansion to foreign investors as well as some pension fund type investors, institutional investors who otherwise would not be interested in our tax-exempt debt, but would now be interested because these bonds are they're essentially like taxable bonds, but from the city perspective, from our taxpayers' perspective, they are favorable because a significant amount of that is subsidized through the federal stimulus package.
Mr. Liu, because of the dire situation that's faced by a lot of cities across the country, can we expect to see a lot of the projects put on hold? And if that's in fact the case, does that mean less issuance of municipal bonds?
While we've got an ambitious program in New York City, even with the difficulties we face at the fiscal level, we have a $28 billion rebuilding program that addresses the needs of our aging infrastructure in New York City. And as part of the $28 billion, we have issued quite a significant amount of Build America bonds. With or without Build America bonds, we expect that there will be strong demand continued for New York City municipal bonds. But of course, we certainly would like to see the Build America bonds program continue next year.
Mr. Liu, I recently interviewed the mayor of San Diego, Jerry Sanders. He had a fairly novel approach. He suggested that a way to get his city's financial house in order would be to eliminate pension plans for new city employees, and that alternative would be to offer a 401k-like savings account. And the mayor of Philadelphia, Michael Nutter, told me the same thing. He said perhaps maybe they might consider that. Is that something on New York City's plate?
It's something that has been discussed quite a bit in New York City, and as you mentioned, beyond. In New York City, we have about $107 to $108 billion of traditional pension plan funds. It's a significant amount, and it's part of our employees' compensation package. There has been an increasing amount of talk to shift defined benefit plans towards defined contribution plans, thus taking the risk away from the city governments themselves and passing them on to retirees. Now, I'm not sure exactly where the answer for that is. I don't know if it's necessarily better to shift risk to individual retirees who are in their golden years, as opposed to spreading the risk all across a municipality. That's a much larger debate. But the act of shifting funds away from defined benefit to defined contributions plans would not in that act itself reduce the overall cost to municipalities. There are other measures that we need to take to reduce the cost.
Such as?
Well, there are talks of changing some of the formulas, the benefit formulas for future employees. And pension cost is not the only challenge that New York City or other municipalities have. There are other fiscal challenges that we face as well.
Mr. Liu, we see that the unemployment rate in New York City ticked up just slightly. It's now at 8.3% from 8.2%. A lot of people say if New York City sneezes, the rest of the country gets a cold. How do we tackle this unemployment problem, specifically here in New York City, where you have the financial capital of the world and it could have ripple effects across the nation?
I'm very happy you brought that up. Actually, I believe New York City unemployment, though very high still, is doing a little better, is a little lower than the national average. And in fact, our trend over the last year has been a continuous downward trend. We do want to address unemployment in New York City, and especially we've got an additional problem of significant disparities across different communities. But job creation is really a fundamental goal here in New York City. We focus our city's purchasing power as well as trying to attract new industries to the city.
We're talking about the unemployment rate in New York City and some of the things that were going to be done, and I'm sorry we had to cut you off because of the commercial. Please continue.
Well, you know, we're very proud of the fact that in New York City in 2010 this year, we've created 74,000 new private sector jobs. That's a whopping 6.6% of all the private sector jobs created in the entire nation. And so we want to continue leading the way in terms of economic recovery and the creation of jobs. But that graph that we're seeing on the screen,
can we put that graph up again, folks? Because it does paint a fairly disturbing picture, because we're seeing that uptrend there, but that's a 5-year chart.
Right. In the past year, ever since the most difficult parts of the recession have passed, in the past year, our unemployment in New York City has gone steadily downward from a high of about 10.6% to now what I believe is about 9.1%. That it has been lower than the national average in more recent months, and it has continued to slide downward as opposed to tick back upwards as the national unemployment has.
Mr. Liu, can I ask you, when we hear these stories about Wall Street bonuses, if a lot of people are making of money, it's got to be good for New York City, because we're talking about taxable income, correct?
Well, in the short term, it's good for New York City. But in New York City, we understand that as significant a sector as Wall Street and the financial services are to the New York economic base, we want to develop additional economic bases to diversify so that we're not so reliant on any single industry or sector. With regard to the Wall Street bonuses, they certainly help our bottom line in the short term, but not as much as you would imagine, because although Wall Street is an outsized proportion of our economic base, it makes up perhaps 10 to 15% of our revenues.
Mr. Liu, last 24 hours, you had to suspend Joel Bondi, the executive director of the city's Office of Payroll Administration. It's that agency, unfortunately, at the center of a multi-million-dollar information technology fraud scheme. What can you tell us about that?
Awful. $80 million allegedly stolen from our taxpayers in New York City. When I first took office earlier this year, I put a stop to additional contracts and funding for that project that had spiraled out of control years ago. Unfortunately, in the last couple of days, the federal government has pressed charges against a few individuals, and now one of our city employees has been suspended. We're going to do everything we can to continue to cooperate with the U.S. Attorney's Office as well as our own Department of Investigations.
Mr. Liu, in our final 30 seconds, yesterday we learned of the arrest of those 4 individuals, nationwide insider trading investigation conducted by federal authorities. Does New York City work hand in hand with the feds on cases like this?
Absolutely. We cooperate anytime we can, and in fact, in this particular case, we brought the potential problem to their attention.
Do you have more responsibility than others? I don't mean as the Comptroller, but as the city, to be the watchdog of something like this, because this city is the financial capital?
And because the sector is part of our an important part of our economic base, we want to make sure that everything's flowing as smoothly as possible. In New York City, in many ways, we are living in a fishbowl. And we've got media here. Bloomberg is located here. We've got Wall Street literally a couple of blocks away from the halls of city government. So we live in a fishbowl, and we like it that way.
All right, New York City Comptroller John Liu joining us. Mr. Liu, it's a pleasure to meet you. Thank you, sir. I appreciate it.